Hello, viewers, and thank you for joining us for another talking point. This is the gathering place for savvy investors who are wanting to understand the finer details of investing in property. Now, because property investment is about so much more than just the property, we often look at topics that are related to other issues which are peripheral to the core investment. But of course, to be a successful investor, it's important for you to be aware of all of these and to have the right team on board who will assist you with every aspect of your investment journey. This is, of course, where the Wealth Masters Club comes in because we have long-standing relationships with experts in each and every related field. It will keep you on the right path. They will guide you, they'll navigate you through the challenges and everything else relating to the investment. We have been doing this for almost 20 years. So you can rest assured knowing that we have gathered the best minds in the industry to create a wealth creation investment model. Now, today's talking points is one of those peripheral things that I mentioned earlier, which is the topic that is inevitable in any investment portfolio. But at the same time, it's a thorn in the side of any investors. So I'm, of course, talking about taxes. And on that note, just a reminder that the personal tax deadline is the 24th of October. So be sure to get yours in on time. Right, now to talk a little bit more on the point of taxes, I've invited one of Destinata Accounting's tax specialists, Dehan Kriel. So Dehan, thank you so much for taking the time to join us today.
Thank you, Damon. It's a privilege for me to joining you in this meeting.
Fantastic. So Dehan, I've got a couple of questions that we've had through based on the article that you sent last week. So the first one is, of course, why is it important to ensure absolute accuracy on your tax return?
Yeah, see, the main thing is SARS is the only institute out there that can pull your bank statements throughout your knowledge to make sure everything you comply to the tax return that are accurate and sufficient for them. So you won't even notice if they draw the bank statements from SARS, and to make sure everything you comply in your tax return will be sufficient and are accurate.
Now, Dehan, many people are getting auto assessments done to their taxes. So you could just explain what is an auto assessment and why is SARS doing that?
SARS is trying to make all the people more aware of tax compliance and tax to be tax liability and complied at SARS. So SARS is issuing auto assessments to get more stats from the people and the taxpayers in South Africa to see what's exactly going on the state of income and SARS issues. And SARS issued the auto assessments for the last 2 years now. And you have 40 days to comply if you are happy or not happy with the SARS auto assessment. And the auto assessment is basically pulled through on the system available through to SARS. If your medical aid is late submitted to the SARS official, then your auto assessment will not have it on. So therefore, it's always important to view the auto assessment and to make sure all the deductions that you're allowed to deduct from the taxable income are on the auto assessment.
Now, tell me, Dion, let's say somebody gets their auto assessment and they feel it's not correct or fair. How would they go about almost saying to SARS, like, listen, we don't agree with this? What is that process?
Okay, so basically it's easy enough for everyone to complete it. As soon as you have your own profile on SARS e-filing or stuff, you log into assessment, you will see you have an auto assessment. There's two options, edit assessment or view assessment. If you're happy to view your assessment, they show you the calculations and do everything that is needed to be completed in the return, and you will see then everything is there. If you see, for example, like your medical aid is not on that assessment, then you click on the edit button and you edit it to make it fair and to make it as accurate as it can be. If you know you have medical aid contributions and it's not showing on the auto assessment, please edit the return, make sure it's correct and accurate, and then submit it yourself to SARS. You have 40 days to comply with this from date of issue of auto assessment.
Right. Now, we obviously work quite a lot with property investors who own multiple properties. So why do you suggest it's better to hold a second home in a trust when we're relating it to tax?
The best way to hold a second investment property or any investment property will be in a trust. That's why we, as the Destinata structure, having also the trust structure for you available. It's basically to provide profits, and if there is a lot of profits, you can distribute it to beneficiaries, and that will be tax free if they haven't any income and stuff. So all the privileges and the pros and cons is better in the trust for a second property. And it also comes to an end when you are in the process of selling that property, that you can distribute the capital gains on that property out of the trust also to the beneficiaries of the trust. So the tax liability is making sense for the trust second property, because you can comply with a lot of tax and just to legal wise distribute it to different beneficiaries to get that tax liability almost to zero.
Well, I mean, that's awesome advice. Now, I mean, besides just having investors, a lot of people who work with the Wealth Masters Club are employees, and a lot of them have retirement annuities as part of their employment package. So, what are the limitations of an RA fund in this situation?
Yeah, see, there's two regulations on SARS, right? The limit for a year or an RI is 350,000 or 27.5% of your taxable income available for the deduction. So, for example, if you got 100,000 Rand taxable income for the year, the limitation SARS will give you on an RI, this the deduction will be 27,500, because that's the limitation. If your income is above a million or whatsoever may it be, then you got a limit to 350,000 per annum that you can deduct for your RA against your taxable income.
Obviously, now we're speaking a lot about SARS and being compliant and all of that. So, why is it so crucial for an investor to be SARS compliant?
Look, it's very crucial for investors to be SARS compliant, as the investors would like to buy a bargain, like I said, of a home or something pop-ups in their way, and they need to complete the transaction in a few days. And part of the transaction documentation, the lawyers and the deed officers will need is a tax clearance certificate from the taxpayer. And if the taxpayer is not compliant, the process won't be such easy to receive those documents from SARS. And as soon as you're compliant and you keep your stuff up to date, then the compliance statement to get the tax clearance certificate for such a transaction, it's way faster. It takes almost more or less 30 minutes, and then you have it. And if you're not compliant, then we first need to get you compliant, get your stuff up to date, and it will take time. And as long as you take time, the transaction go pass by, and another investor with everything in order can buy it under you.
And now, the last question I've got is it possible and actually legal to be paying less tax through systems in place, such as the Wealth Mastery system?
Yes, that's very important to understand correctly. Everything we do is legal and SARS approachable. So that's, like I said in the previous questions, the distributions are allowed, and it's legal to do the distributions to beneficiaries, to for capital gains, income tax, everything. And you can everything is legal to do the tax liability, to bring it down in legal aspects with distributions and stuff. And therefore the wealth master strategy is so good for everyone there out that will be investing into property and stuff. So we can do a lot with the wealth master structure only to get the tax less for the year of a tax liability.
Fantastic. Thank you so much for taking the time to go through these questions today, Dehan. And obviously, to those of you at home, thanks so much for watching. But now, if you're interested to find out more about the Wealth Mastery system that we just spoke about, or how we work and what we do, then you can register for a free online training, which will be available to stream from 9 a.m. on Saturday morning until midnight on Tuesday. There, our founder, Kurt Kutsia, will take you through the entire wealth mastery system, how we work and why we do what we do, and how you as an ordinary citizen can become very wealthy and successful as a property investor. Now, the best part is that we assist you in creating a unique TTS trust structure, which is what Dehan briefly spoke about earlier, which will ensure that your wealth doesn't go when you pass on, but will instead pass on to your children and their kids and future generations. So for more information, check out the link in the description below. And for now, that's all we have time for, but we look forward to seeing you back again next week. So once again, Dehan, thank you so much for your time.
Thanks a lot. I appreciate it.